Hello and welcome to the look ahead for Wednesday, the 10th of April, with me, Fiona Cincotta, Senior Market Analyst at City Index. So, this week's been relatively quiet up until now. The big day tomorrow, Wednesday, we've not only got two central bank interest rate decisions, we've also got Japan PPI and also Bank of Japan Governor Ueda is due to speak. But the main focus will be on US inflation data. So it feels like the market has been waiting quite considerable time for this data. It comes after that stronger than expected US jobs report. Now, inflation is expected to tick higher. It's expected to rise to 3.4% year on year in March, up from 3.2%. However, core inflation, which removes more volatile items such as food and fuel, is expected to cool to 3.7%, down from 3.8%. So the big question is, will inflation come in hotter than expected? That's what the market's going to be watching for. Let's not forget that we've had some data points in that have suggested that the US economy really is proving to be fairly resilient. We've had that stronger than expected US job data. We've seen manufacturing return to growth unexpectedly, but we have seen a slowdown in the services sector, although it's still growing just at a slower pace as far as the PMI data is concerned. So, I mean, if we get stronger than expected inflation data, then we could expect that to have an impact on the US dollar. Obviously, that would cause the market to push back on rate cut expectations, and that could also bring gold lower. Now, if we just have a think about rate cut expectations at the moment, the market is pricing in around a 50-50 probability of a June rate cut. And the market is now only pricing in around 60 basis points worth of cuts this year. That's down from 75 just a few weeks ago. So, if we do have that hotter than expected inflation, will that see the market reassessing rate cut expectations for June and for the rest of the year? Now, gold has been a bit of a phenomenon. It's powered on to record highs, even though we've seen the market rein in those rate cut expectations. So it's being supported by concerns over geopolitical concerns, also concerns over government debt, and also on central bank buying. But I think, maybe if we do get those I think perhaps if we do get a cooler than expected inflation print, that could see gold power on higher. Obviously, gold performs well in environments of lower interest rates because it's non-yielding. So, if we get weakness in the dollar, if we get a move towards a likelihood that the Fed is going to cut sooner rather than later, then that will boost gold. So as far as levels to watch on gold is concerned, I think at the moment it hit that all-time high of 2,353 earlier today. It's come down. We do have a little bit of a longer wick there, suggesting that buying demand right up those levels was relatively weak. But buyers will look to take out that level as it powers on towards the 2,400 level. Do just watch, though, as I said previously, very overbought, which should be a reason for bulls to be cautious. On the downside, as far as support is concerned, we've got the weekly low at 2,300, and then at 2,228, we've got the April low as well, just to be watching out for those levels. But apart from that, there doesn't really seem to be too much in the way of support until that sort of 2,222 level. So if we just then also have a look at what's going on with the Dow Jones, also, that's come under pressure recently as we've seen yields rise and the market rein in those rate cut expectations. Now, Dow Jones reached an all-time high in March of just under 40,000. We've seen it's fallen off fairly steeply since then. Has found support on the 38,500 level. That's the March low. It's also the April low. Now, sellers will be looking to break that level down. So if we get hotter than expected inflation, then we could see that level there broken down, and that would bring 38,000, the February low, into play. If we get cooler than expected inflation, then maybe we will see that the Dow Jones rebound higher. Obviously, a lower interest rate environment is more beneficial for stocks and investment for companies. So we'd look for a move above the level of 39,284. That was the previous high, the February high. And above that, that brings in 40,000 back into focus. Now, as I said, we do also have two central bank meetings. They're not expected to move on interest rates. So the Bank of Canada is expected to leave on hold, as is the New Zealand Central Bank. So we've also got comments from Bank of Japan Governor Ueda, as well as PPI data from Japan. Now, PPI data from Japan is expected to rise 0.3% month on month. That's up slightly from 0.2%. On an annual basis, it's expected to rise modestly by 0.8%. Now, if we get stronger than expected PPI, that would be bullish for the yen. But also, I think markets will be listening very closely to what Ueda has to say. If we have a look, the Bank of Japan hiked interest rates for the first time in 17 years, and yet the yen is still really weak. It's trading around the 34-year low against the US dollar, in part because of that increase in yields in the US that we've also seen. So if we do sort of get a more dovish stance again from Ueda, we could see that the yen comes under further pressure. And that's despite the fact that we've had quite a few threats of intervention by Japanese government officials. But the line in the sand there is that 152 level. That is the level that the market believes that the Bank of Japan will intervene at. And so that is proving to be a very strong resistance level. If we do get a move above 152 and there's no intervention, then that really does leave the yen vulnerable to weakness to the 155 level. On the downside, if we do get, for example, cooler than expected inflation and we see the US dollar weaken, or we hear a more hawkish sound from Ueda, then we could find that the lower band of that parallel channel that the USD Japanese yen is trading in is tested, and that's going to be at the 150.80 level. That's also the April low. It's also the February high. So that's quite a key level to be watching. Below that, then we'll be looking at around the 150. Anyway, I do hope that you like what you've seen. If you do, then please do give this a like. And if you would like to receive more videos like this, then please do press the subscribe button. Thank you very much.